It's risk on in most global markets. Nigeria's bourse are no different. We see it negative for the week, and for the third quarter, it's down almost 5%. What's pulling down on this market?
I think you're absolutely right, Samantha. We're seeing a heavily correlated market, which generally is in line with what is happening on a global stage. So the resurgence of the Greek crisis, Greek debt crisis, is obviously affecting the Nigerian market, where a number of foreign investors are a lot more wary. I think in addition to that as well, we're seeing uncertainties over the resolution of the banking sector crisis, where the CBN has reaffirmed the 30th September deadline for recapitalization of the rescued bank. So I think that's also causing some jitters. Thirdly, as well, I think the yields in the fixed income market are a lot more attractive than what we're getting in the equity market. So there's been a huge switch back of assets back into fixed income from equities. And then finally, we think that generally just sentiments are low. And also, even from a macroeconomic perspective, the management of the CBN FX reserves, or the federal government reserves, hasn't been particularly transparent. So a lot of investors are more cautious before investing in the market.
Looking at non-banking sector stocks, are there any counters that you see trading at a substantial discount to their fundamental value?
I think there are a number of non-banking stocks that are doing fairly well. The likes of UACN. I think UACN has done relatively well. It's a company that has strong cash flows. Their earning potential is also pretty good. They have a very good management team. And there's also been an M&A activity from Tiger Brands, where they acquired 49% stake in UAC Foods for $60 million. So I think generally the sentiments on UACN is good. We also like flour mills as well as Dangote Cement, because these companies are generally trading at a discount to their fair value.
Interesting, you mentioned flour mills on the back of those disappointing results which came out, but the country still is the biggest flour miller, which means it does have pricing power. What are your views on the dividend yield, though, of the stock? It's sitting at 1.2%, which is relatively low.
Yes, absolutely. The dividend yield is low. However, if you look at a projected PE basis, it's trading at a discount to the other food and beverage companies within that sector. I think generally flour mills, as you rightly mentioned, is the market leader in that sector. Obviously, there was a setback because it had to take a 5 billion naira hit as a result of its equity ownership in Unisem. But we're fairly confident that the recovery should be quite steadfast, and the company should be back on track in no time.
Let's look at the broader food and beverages sector in light of disposable incomes in the country, which are set to be under some pressure. We've got inflation, which is sitting at 12.4% year on year in May, whilst it is set to come down. Standard Bank predicting it should come down to just over 11%. We do have anticipated rising fuel costs if the fuel subsidy is removed, higher electricity prices. How is this going to play into disposable income and then spend on counters in the food and beverages sector from consumers?
I think inflation is always a huge concern. I think the level of liquidity in the system is quite high. I also think that the talk about the deregulation would also add to the pressure and the concerns as well. I also think that the federal government spending on the minimum wage that was recently raised to 18,000 naira for public staff or public sector workers obviously would also increase the liquidity in the system. But I believe that CBN has actively tried to issue more notes to mop up the excess liquidity in the system. So I think they should try to get a hold of the inflationary pressures in the system.